This is Darrin T, Mish, the IRS Solution Attorney.
And
Welcome.
welcome. I'm your co-host, Katrina Madewell.
50 tax write-offs that you don't know about, and we got like 40 minutes to go through them. So
If we talk too fast, we'll repeat. And we are streaming live on Facebook, so you can rewatch it if you want.
I think the better solution is going to be to go to the website at getirshelp.com and find the transcript of this show in a day or two, and the video, because we're going to go fast.
And you can get IRShelp.com if you have an IRS problem or you want to talk to Darrin.
Now, in the interest of full disclosure, when I was doing the research for the show, I basically found a web page or website called gobankingrates.com. And
That is such an attorney thing to say. In the interest of full disclosure, I did some research, and this is how our show came about.
No.
Well, of course you do research for every show.
The reason I brought it up is you can actually go to that website at gobankingrates.com and find the post that's the basis of this show, and there'll be more information there if there's something that you're really interested in that we go too fast.
I don't know what prompted it, but it's good information. I think anybody listening today would enjoy knowing 50 write-offs that you don't know about. So if there's any CPAs listening today, we're going to encourage you to call in and maybe hold on. And if you can chime in on some of those and we can get through these fast enough, we'd love to have your input. It's 888-404-1010. If you're a CPA and you want to give your professional information and opinion on some of these, 888-404-1010. All right. Number one.
So we got to go through 50 write-offs in 40 minutes, and she's inviting callers to tell us what they think.
I have to keep you on your toes.
Okay,
We're going to keep this
fascinating.
fun.
Okay, so first one is medical and dental expenses. A lot of people don't know this, but medical and dental expenses can be deducted for your spouse, and your dependents. The catch is it has to exceed 10% of your adjusted gross income. So if you're middle to high income, probably not going to be a good deduction. If you're lower income and have high medical expenses, could be good for you.
Okay. Number two is tax preparation fees. Most people probably know this one.
I don't know that people know this one,
Really?
honestly.
It's a professional service.
So if you paid a professional preparer to prepare your taxes, you get to write that off on the following year's return. And
What about your W-2 people that don't have a lot of write-offs and if they're taking standard deduction, doesn't apply?
No, it doesn't apply.
Okay.
A lot of
That's
these won't
maybe why.
apply. Okay, if you're filing a 1040 easy and you're getting a W-2 and you get a big refund, and you don't itemize, probably most of these will not apply to you.
All right, so the third one on our list is home renovation deductions.
Now, it's not as good as it sounds, right?
Sure it is.
It's good, but it's not as good as it sounds. I mean, it sounds like, oh, I'm going to renovate my home. I'm going to deduct the cost. No, only if you're renovating the home for medical purposes, like adding an entrance and exit for, wheelchair ramps, lowering cabinets for better accessibility, maybe redoing the bathroom for wheelchair, with the rails
Right.
and stuff like that. Those renovations would be deductible.
There are some, like for example, there's rebates and stuff for solar, which is a whole other topic for another day.
Yeah, for sure. That and I actually need to look into that because I want to do that. But
So this one floors me, like the next one, job-related or job search expenses.
yeah,
Job search expenses?
If you itemize, you can deduct expenses you incurred during a job search, but you have to have searched in the same line of work as your current or most recent jobs. Different kinds of expenses you can deduct include transportation. So, like if you're
Uber?
driving to, theoretically, if you're driving to job interviews and things like that, preparing, printing, and mailing out your resume, other fees related to job searches. Maybe, I don't know if there's paid job boards where you're an applicant, I'm not really sure. But
It's
if there
so
were,
nice that they're going to let you write off your expenses for income that you don't have.
Well, it sort of makes sense because if small business owners can deduct ordinary and necessary business expenses in their business, well, isn't a job search sort of analogous to that? It's the bottom line is it's necessary for the production of income. In order to get a job, you have to search for a job, but if it costs you money, then you should be able to deduct that. So that's where they're coming from, I think.
That makes sense. All right, so the next one, this is a little bit baffling, but hobby expenses. How in the heck can you write off hobby expenses?
Yeah, this is kind of a weird one. So a lot of people, especially, I'm going to give you the best example I can think of in the horse business. Okay, you've got all kinds of people that live on farms and they have a couple of horses, and so what they do is they try to create a business. Maybe they do a little training or boarding or something like that, and so they create a business. But horses are expensive. In fact, I was offered an opportunity to have a free horse yesterday, and I was like, only if my wife...
Free liability?
Only, yeah. I said, if it's my choice alone, absolutely not. If my wife must have, then okay, we can do that. But
Happy wife, happy life.
Yeah, horses are extremely expensive, and so what people do is they try to incur losses, or they don't try to incur losses, they just incur losses because horses are expensive to keep, and so then they want to write the losses off. Well, the IRS is not going to be real down with that, although I have won this issue on an audit before. In the hobby loss rule, so your hobby expenses can be written off, but only to the extent that they don't create losses. That's the bottom line. And you also have to write off any hobby income as well.
So they're letting you write stuff off if you have income.
Yeah.
From your
exactly.
hobby. Like if
Exactly.
you were trading, I don't know, car parts or something, right? Maybe.
Yeah, probably trading card parts is probably more like not a hobby. But I mean, there's
I'm trying to
gun
think of a hobby.
collecting. Gun collecting, for example, could
Okay.
definitely be a hobby.
Gunsmithing, maybe.
Probably not gunsmithing because you're not gonna like.
Anyway.
Yeah, the best example really is the horse thing because there's, people have a couple horses and they're like, man, these things are expensive. So you gotta
We live in a
think
neighborhood in a subdivision with a HOA that clearly does not allow any horses, so, we wouldn't know anything about that.
So one of my good friends and clients just popped in on Facebook Live, and he indicated that even peer-to-peer membership expenses, like for LinkedIn, for example, those would be deductible as well. So if you're on LinkedIn, you're trying to find a job, your LinkedIn expenses, if you're signed up for any of their levels of service, those would be deductible as well. That's a good point.
Excellent point. All right, state and local sales taxes.
Yeah, so don't forget that state and local income taxes can be deducted on your tax returns. Florida's kind of a unique situation, right? We don't have an income tax here, and so typically what you see is we write off our sales tax, and it's just a formula based on how much income you have. They say, okay, if you have that much income, then you would have likely paid this much sales tax, and it goes on to your Schedule A, and helps you itemize your deductions. In other states where you have income taxes, those income taxes are offset too, and it's kind of makes sense. If you're living in Massachusetts and you're paying $8,000 a year in state income tax, shouldn't that be on pre-tax money? I mean, you shouldn't have to pay that state tax after you've already paid the federal tax. So that's kind of the concept of why they're deductible.
Well, we won't even get on the topic of double taxation because that definitely exists in some areas. But state and local foreign taxes.
So different taxes like property taxes, personal property taxes. Some states have personal property taxes. I think Florida actually has an intangible tax.
We do. 0.002%.
That I don't deal with. Like
Yeah, that I would know.
Um,
We have an intangible tax and state tax stamps on the mortgage.
foreign, local, and state real estate taxes. I mean, if you have your state real estate
Your taxes and insurance, you can
on your
have.
primary residence are definitely going on Schedule E,
Yeah.
or Schedule A rather. And don't forget
But
your rentals.
it's interesting. It says you can write off foreign taxes as well, foreign property taxes and income taxes.
Well, sure. If you owned a house in the Bahamas, and or if you had a rental for sure in the Bahamas, and you have to pay tax in the United States on that foreign rental income. If you had foreign taxes that you were paying, then you could definitely write those off. Don't forget also, if you're a U.S. citizen, you have to pay taxes.
Pat.
You have to pay taxes on your worldwide income. So listen, if you're living in Saudi Arabia and you're paying taxes over there, you get to write off the first about $100,000 or so of your foreign income. So
Makes
any
sense to
taxes
me.
you pay, you get to write those off.
And then state balance due. What is that? State balance due?
If you owed additional taxes on a prior year's state tax return and you paid them in the current year, you might be able to deduct those taxes this year.
Okay.
So
Makes sense. All right. Well, if you're just tuning into the show, this is the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell, and that's Mr. Darrin Mish. And today's show is all about 50 tax write-offs you don't know you can take. And we're going to keep going with this conversation when we come back after the break. If you got a question, we'll do our best to answer it today. We got 50 of these things to cover, but it's 888-404-1010. We'll be back in a minute. Thanks for the Facebook Live. We'll be back in just a minute. And that is par for the course for today's show.
that's Pat's opinion of what we need to be doing to get through these 50 tax write-offs that you didn't know about. We went through 8 in the first segment, so that's really good. We don't have time to recap them, so hopefully if you missed that part of the show, or if you're interested, go visit the website at getirshelp.com, or you can visit the podcast or the app at the IRS Solution Attorney.
Catch the whole show in its entirety. Before we skip the last one on the page is jury duty pay.
Yeah, it's not as good as it sounds, right? I mean, typically when you go through jury duty, you get paid, somewhere between $10 and $20 a day.
What are you going to do with that? I don't even know if that's enough to take an Uber.
And what you can do is you can actually, if you gave your jury pay to your employer, because he continued to pay your salary while you served on a jury, then you can deduct your jury pay from your taxable income. That's kind of a cheater one because, I mean,
That's
unless you're
weird.
in a week-long trial or month-long trial or something like that, I don't think your jury pay is going to amount to
Does the
much.
jury duty pay ever change if you're in a week-long or month-long trial?
I don't think so. I think it's pretty much just set by state law per day, and it's just not a whole lot.
They must have said it in the early 1900s. 'Cause
Incidentally.
it's still $10 a day.
Incidentally, I've been selected for jury duty
Really?
3 times
You're an attorney.
since I've been an
like
attorney.
you served on that jury
I
trial?
actually served on the grand jury in Pasco County for an entire term of 6 months. And
Wow.
when they called me for selection, I was like, come on, there's just no way. I used
Right,
to be a
'cause you're an
criminal defense
attorney,
attorney.
yeah.
I mean, come on. And no, the state attorney for the circuit actually was there during the voir dire, and he asked me a couple questions, and he's like, he didn't say this, but he was like, okay, that guy will do.
What did they ask you? Do you remember?
Where I worked and who I worked for, and if I thought I could be fair and things like that. I thought
Because
since
usually the minute they ask if you have somebody in your family in law enforcement, you're out.
yeah, but I'm not in law enforcement.
But I have law enforcement in my family.
I think why he picked me is on the grand jury in Florida, we only hear cases that are potentially capital matters, so like death penalty, murder type cases. And he knew that I would understand the burden of proof at the grand jury level was extremely low, and most lay people don't get it. They want to prove the case in indictment. Well, that's not what you have to do. You just have to show probable cause at an indictment. It's just not a whole.
Wanted you to probably lead the jury.
Actually, it was a vice foreperson, so yeah, it worked out. And the greatest thing was during my entire 6-month term, there was only 2 cases, so felt pretty good living in a fairly safe place as compared to some of the more urban counties in,
Yeah, right.
in the area.
It's full all the time. All right, moving right along. The penalty for early withdrawal of a savings is tax deductible?
So if you withdraw your money early from a certificate of deposit and an IRA or a similar account or investment, then the penalty you paid could qualify as a tax deduction, even if you don't itemize deductions on your 1040. You're gonna have to check that out though.
And volunteer for work donations.
Yeah, so this is pretty much a mileage thing. If you volunteer, for a charity, then you can deduct the cost of gas and oil, for example, for your car. If you volunteer, if you don't want to do actual expenses, then you get a whopping 14 cents a mile.
Oh, lovely.
Hey, it's better than nothing.
Yeah, for sure. All right, bad debt deduction. That's a pretty good one.
Well, it's
Isn't
not
it?
as good as you think. If you lent money that you never got back, it's considered a bad debt, which
Yeah,
it might
Bruce.
make you eligible for a tax rebate. But generally, to deduct a bad debt, you have to have previously included the amount in your income or loaned out the cash. So here's what it means.
That's the little hook.
Yeah, most taxpayers are what is called a cash basis. That means when you actually receive the money, you put it on the books. Well, if you're an accrual basis taxpayer, then you put the money on the books when you send the invoice.
So anticipated income.
Yeah, you put it on the books when you invoice it, not when you get the money. And so naturally, if you have bad debt, so an invoice was never paid, then you
But
get
you
back
never-
that out.
yeah,
So
you wanna
it's a
cancel it
deduction,
out.
but it's not really applicable to most people, I don't think.
All right, moving expenses.
If you meet the IRS distance and time test after you relocate for a new job, you can take a moving expense deduction. The qualified expenses include the cost of moving your belongings and traveling to your new home, and the standard rate is 19 cents a mile. You can also deduct the cost of lodging, but not meals for yourself and other household members. So I actually have seen lots of people qualify for this.
What's the distance and time test?
I had a buddy. Well, it has to be more than 50 miles, I think, and it has to be
Like moving jobs?
Yeah, and it can't. And I don't remember the time test, but it's basically you can't move and then move 3 months later and then move 3 months later. It's got to be like a certain amount of time in the job. I had a buddy that was a vice president for Office Depot, and he moved from like Virginia to California, and obviously had a big moving deduction because he was in the same field. So.
Well, the next one is mortgage insurance premium deductions.
So if you obtained a mortgage insurance policy in 2007 or later, you might qualify for a deduction on the amount that you paid towards the premiums as part of the Protecting Americans from Tax Hikes Act. And this will remain in the code through the end of 2016, but not 17.
Yeah, and to be clear, this is not your homeowner's insurance. This is your lender
Absolutely.
loss insurance.
Right,
So mortgage
absolutely.
insurance premium that protects the lender against
It's
the fall.
PMI.
PMI.
Right.
Or MIP, they're one and the same.
Oh, they are? Okay.
Yeah.
So,
One's for a government loan, one's for a conventional loan.
and so that's basically if you're getting like a VA loan or a FHA.
Well, no,
FHA,
actually VA has no MIP at all
Is that right?
because it's
Okay.
guaranteed by the Veterans Affairs.
But FHA does.
FHA does, conventional does if it has less than 20%.
Okay.
They all have MIP
So that
or
may be
PMI.
deductible,
Yeah.
which is kind of cool.
MIP is for government, PMI is for conventional.
Oh, of course, we need
Weird
more acronyms
little,
in our life.
yeah, quirky. Yeah. Same thing though. It's interest against the lender's default, basically. You pay insurance in case you default. That's what it is. So mortgage interest deduction, one of my favorites, and I know that NAR, National Association of Realtors, Florida Association of Realtors, they work very hard to make sure that this stays on the table for homeowners to deduct.
Yeah, this would be a travesty if it came out of the code.
Oh, they've been trying for a long time.
And it would absolutely kill the economy. Like one of the big incentives for buying a house and buying an expensive house is the mortgage interest deduction.
And or
right?
getting a loan.
Right.
For people that can pay cash.
Absolutely. So most taxpayers who itemize are eligible to deduct the interest that they paid on their mortgages. You can deduct the interest you paid on loans of up to $1 million or less, but if you're married and filing separately, you can deduct only the interest on loans up to $500,000. That makes sense. You
Right.
can only deduct it up to half.
Yeah, it's a big one. I think if they ever try to get rid of this, it would repeal pretty quickly. I don't think it would be anything that would stay off the table.
Yeah, and I don't think either party is really that interested. And
No, because everybody has
everybody's got an
a home
interest
and they
in
want
this.
that deduction.
And actually, housing really is a vital part of the economy. When housing's down,
Absolutely.
the economy's down. Period. End of story.
Hey, look what happened back in the heyday. I mean, it was almost a global economic collapse because
Yep.
the housing market in the United States collapsed.
There was the meltdown for sure.
Yep. So also mortgage points. So
Yep.
to be clear, this is discount points, not origination.
So what it says is if you itemize, you can deduct the points of prepaid interest you paid to purchase or build your primary home. Generally, if you can deduct all the interest you paid on your mortgage, you can also deduct all of the points.
Right.
So this one actually applies to me. I bought a house this year, and there's some points or something on there. I know there was a bunch of stuff that I'm going to get to deduct, so I'm pretty happy about that.
Also, your appraisal fees. This one's a little bit of a surprise. Appraisal fees?
You can't deduct appraisal fees if they went toward the purchase of a home. You can deduct them as a miscellaneous itemized deduction, however, if the property was donated, but only if the fees totaled more than 2% of your adjusted gross income.
Yeah, and that
That's
happens regularly.
It's kind of one of those like, oh, okay. Maybe, probably not.
All right, the next one is your home sale.
Yeah, and I wish this was even better, but it's a pretty good break. If you sold your home at a profit, you can exclude up to $250,000 or $500,000 for married couples filing jointly of the gains from your income.
This is pretty good though, Darrin. I mean, this captures most people, and even so, like even if you're above that $500,000 threshold, you still get that grace up to that period.
It captures most people in Florida. It
Right.
captures most people in the lower housing cost areas in the country. It doesn't cover most people, like say in California,
yeah.
New York, New Jersey, places like that. And so it really needs to be upped. I actually wish they would just do away with capital gains for the sale of primary residence.
What?
It would make the economy just absolutely boom.
No way. We have to disagree on this one.
Why do you think that?
Because capital gains taxes, you can avoid paying taxes on your home. That's an incentive for, there's people that we have that are clients that move every 2 years.
So what I'm saying is
For that
if
gain.
you did away with the tax on
Oh,
those
the tax
gains.
period. I thought you meant the deduction.
Yeah, if you did away with the tax on those gains, what you
Gotcha.
have is
Oh,
more
yes,
activity.
yes, sorry.
It would actually cause more speculation too.
Well, there would be more investment, property movement, and that kind
Right,
of stuff.
for sure.
Okay, I misunderstood. I thought you were saying get rid of that deduction. I'm like, what? No way.
And I've made that comment on there before, and you had a similar violent reaction, and I was like, I don't even understand like where she's coming from.
Because that, along with the mortgage interest deduction, is one that
Yeah,
gets
for sure.
attacked a lot.
Yeah, for sure. Okay.
Also, so self-employed health insurance.
Health insurance is tax deductible for self-employed taxpayers. It's one of the breaks that you do get if you're self-employed. If you were self-employed in 2016, you can deduct premiums you paid for medical and dental insurance as well as for qualified long-term care insurance. So it's a little break. If you paid for health insurance yourself, then you're going to get a deduction for that. But
A couple more, real quick. Fees to collect interest and dividends. That's also deduction.
any fees you pay to a broker, bank, trustee, that kind of thing on taxable bond interest or dividends, then those are deductible as well. investment fees and expenses, same sort of idea, right? If you had investment fees that were required to actually earn the income from the investments, and they're going to be deductible as well.
Gotcha. Well, if you're just tuning in for today's show, this is the IRS Solution Attorney Show, and today's topic is all about 50 tax write-offs that you didn't know about, which is why we're going in super speed mode. When we come back, we're going to continue on and let you know what these 50 tax write-offs are that you don't know about. We'll be back in just a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Mabel, and today's show is all about 50 tax write-offs that you don't know about. Some of these you might not even should be taking.
And I don't know what number we're on, but we're well along because we just don't have a whole lot of time today. So the next one is going to be IRA losses. You can claim losses on traditional and Roth IRAs as a miscellaneous itemized deduction, but only in very rare cases. So I'm going to leave it at that. Look it up. Just be aware that it exists.
Ask your CPA.
Yeah, or just look at the law. Just look it up yourself. Either way, but it potentially could help you out.
And repayment of income, that's on the list?
Yeah, if you had to, let me give you an example. If you were on Social Security or something like that, and there was an overpayment, and then you had to pay that back, then you can deduct that.
Okay.
That makes sense because you already paid taxes on it.
Okay. And of course, legal fees. So your people that come to you for help
My
with their
favorite.
IRS problem, they get to write up your legal fees?
My favorite on the list is legal fees. You can itemize, if you can itemize, you can deduct certain legal fees related to doing or keeping your job, collecting taxable alimony. Again, that makes sense, right?
Yes.
Collecting taxable alimony, or any fees dealing with tax advice. So it's debatable what I do, pretty much.
It's debatable?
It's debatable because I solve tax problems.
Well, I mean,
is
think
that
about
tax
it.
advice? I think it's tax advice.
Think about it. And we've talked about this a million times on the show. The idea is to get the taxpayer back in the system, so they're getting revenue. So why wouldn't that be tax deductible?
Just remember that deductions are subject to the 2% rule, which means that the fees must total at least 2% of your adjusted gross income. So if you paid $2,000 to an attorney and you make $500,000 a year, no bueno.
You can't write it off?
Not going to work because it's subject to the 2% rule.
Maybe they'll pay more. I don't know.
I'll tell you the big problem with taking in as much caffeine as I did today is that my brain literally is working faster than I can talk.
See, now you know why I always talk the way I do.
So I need to take a chill pill for the next show.
I love it. I think it's awesome. I think you should drink more Diet Coke on the way in. It's gambling losses.
So remember, okay, now here's the funny thing about gambling losses is people always want to deduct their losses, right? But they never want to, actually pay tax on their winnings. Now the reason that I don't really gamble is because every time you gamble, you actually have a silent partner in your gambling called Uncle Sam. Like, if you win, he's got his hand out, for sure. Now, if you're going to deduct the gambling losses, and I can tell you this from personal experience, not from my gambling, but from
personal experience.
Representing lots of clients with gambling loss issues on their audits.
You live vicariously through your clients.
You better have records. You better have records to document, well, yeah, kind of. I can tell you what doesn't work is you can't go to the horse track and just scoop up all the chick tickets off of the ground. That's not going to work. The best thing to do,
but it's all cash.
The best thing to do is not use all cash for gambling. The best thing to do is use a Players Club loyalty card and stick with the same club because they will actually give you your records of wins and losses. They don't like to because they don't want to put it in writing how much you've lost to them, but they will. So that's the best way to get around the gambling losses.
Plus, they have to report that as income, don't they? Unless they're a Seminole.
Yeah. Let's move on.
Safety deposit box rental fees can be tax deductible.
This is kind of a quirky one. You can deduct safety deposit box fees paid for storing documents and items that are reasonably related to tax-related investments. The deductible fees, however, are also subject to the 2% rule. Probably not going to come up for most people. What does a safety deposit box even cost to rent? I have no
I don't know, but they're cheap. I remember asking at the bank, it was super cheap.
Yeah.
Yeah. Like if you wanted to put something in there you didn't want to burn in your house or whatever. I don't know. I don't even know what people store in those anymore.
Yeah.
Stuff.
I have no idea. My only experience with safety deposit boxes is watching movies where people put like bad stuff in there, passports and cash and guns.
Passports and cash. Yep. All right, next on the list is alimony. So if you're paying
if you paid alimony as part of a divorce or like a separation kind of situation, which we don't really have in Florida, you can deduct the amount that you paid There's a bunch of tests about what qualifies as alimony, but pretty much if the court calls it alimony, it's going to be deductible. Your spouse or your former spouse, I guess, is also going to have to pay tax on the alimony.
Income. All right, car registration fees. You may be able to deduct this one too.
Yeah, I mean, if you meet certain requirements, you might be able to deduct some or all of your vehicle registration fees, probably related to your self-employment and how much you use the car in the business.
Oh,
Look
yeah.
that up.
Casualty, disaster, and theft losses.
Yeah, we forget this one. Casualty losses would be like a storm, for example. The same thing as a disaster. And theft losses. I've actually
Or if your house burned down.
I've had a couple of clients who fell for these schemes that we talk about sometimes on the show, where somebody calls from the Middle East or whatever and convinces them. It talks them out of all their life savings and whatnot. Those are actually theft losses and can be deducted, and it actually makes sense.
Wow.
If you get talked out of
That's a good one.
200 grand,
You should be able to write that
you
off.
should be able to write that off. And so, the one case that I'm thinking about, they actually denied the write-off, but we're going to get that case settled in an offer and compromise anyway. That's the point of the show, is just keep this stuff in mind.
Yeah,
And you're
ask
gonna have
your
to do
CPA.
you're gonna have to do a little investigation on each one of these. But if the layperson, the taxpayer, is generally aware that these things exist, then you have a better opportunity of taking the deduction.
Right.
Most taxpayers are not going to give you they're not going to sit with you for 2 hours and ask you all this stuff. It's
Right.
just not. They don't have time.
So this is something maybe you could even raise point to them. So just make sure you don't miss it.
Absolutely.
Next one, military reservist. Travel expenses. That's a good one.
So-
Had no idea this would be on the list.
If you're in the reserve or the guard and you're traveling more than 100 miles from your home for serving as if you're drilling, you can subtract the travel expenses from your income that you report in your tax return. Different qualifying expenses include transportation, meals, lodging, and there's some exceptions like there is for everything.
That's
right?
pretty cool though. It's a good one.
Pretty much every Friday morning I'm driving south on I-75 and I see all the heroes that are in the reserve driving their military vehicles driving north. They're going up to Camp Blanton, I think.
So the next one is HSA contributions or health savings account contributions.
I love health savings accounts, and I actually think that health savings accounts are the answer to the healthcare crisis that we have. in
I
America.
think they're a big chunk of it, that's for sure.
But what they are is they're tax exempt accounts that you can use to pay or reimburse certain medical expenses. You can claim a tax deduction on the contributions that you or someone else made as well. So they're really, really, really good. I forget what the numbers are because I don't have one this year because Obamacare knocked me out of that whole deal. But for a family, you get about $6,000 or $7,000 worth of contributions. Those are made with pre-tax money, which is kind of like a deduction, only a little bit better. And then you can use that money to pay for basically almost everything medically related, including over-the-counter medicine. So it's
Let me
really
tell you
good.
what, we take some Max every year and we use it every year.
Yeah, when I had one for somewhere between 7 and 9 years. We used it every year as well. Family of 4, you're going to go through $7,000.
We
of
always,
stuff.
someone's always in the hospital every year. Somebody broke something or always.
Lately, it seems like I'm paying dentists' kids to go through college. I mean, it's just like everybody in the family's got to go, and it's expensive.
The next one is IRA contributions, which is a great one. You see this one a lot mailed out around the beginning part of the year because you have all the way till April 15th.
Yeah, don't forget, you don't get to deduct contributions for Roth IRA
That's right.
contributions. But if you're making contributions into a traditional IRA, then you get to write those contributions off. Now here's the difference. People may not remember. The Roth IRA, you're paying, the money you're putting in is after tax, and so it's not taxable later when you make
Right.
withdrawals with all the growth. So that's a great thing.
So the earlier you do that, the better.
Yeah, Dave Ramsey talks about them all the time, I'm sure.
Loves Roths.
And but a traditional IRA, you're taking the deduction, but then the downside is you're paying the taxes when you retire, which may not be a big deal if you don't have a lot of income, then you're not going to pay a lot of income tax.
The only thing that worries me about that is you're paying taxes on the unknown. You don't know what that's going to be.
Well, I agree. The other problem is though that there's also income requirements on restrictions on the Roth. So after you earn a certain amount of income, you're not eligible for a Roth. And so all you can do is a traditional IRA.
Well, I would push it while you can and take advantage of that. The next one on our list is personal exemptions and dependents.
For personal exemptions and dependents, you can deduct up to $4,050 for 2016. That's up $50, yay. And but there's income limits on these deductions as well. So just remember, don't forget the kids and the dependents in the household. Sometimes people do. It's kind of interesting.
All right, 401k contributions.
So 401k plans provide special tax status for retirement savings and have immediate tax benefits. So if you contribute to your 401k, you'll effectively lower the amount of your taxable income, so there's a smaller impact on your take-home pay. So basically, it's a deduction because the money that goes into the 401k is not being taxed.
Right. All right. Dependent care flexible spending account.
A dependent care flexible spending account lets you set aside pre-tax money for expenses related to caring for a child or a disabled spouse, a parent, or other mentally or physically handicapped dependent. You're allowed to contribute up to $5,000 towards an FSA every year, and the amount you contribute won't be taxed. So it's like an HSA, but for these special expenses.
Right. The next one we'll be moving into soon, and that's tuition and fee deductions.
Regardless if you take the standard deduction or you itemize, you can deduct up to $4,000 in qualifying higher education tuition and fees you paid for yourself, your spouse, or a dependent.
Your kids.
So that's kind of neat, I guess.
We'll take it.
Yeah.
We didn't do college prepaid, so, you know.
I'm going to have a couple kids in college here in a few years, and I'm going to need all the help I can get. It's
Yeah,
gonna be so
birds.
expensive.
Next one's union dues.
Yep, you
Turn
can
that
deduct-
music down, Pat. We got 50 of these to go through.
You can deduct union dues and other related expenses that are part of being in the union, if being in the union is a
Requirement of
the
your job.
And remember, it's subject to the 2% rule, so it's got to exceed 2%.
And you work uniforms for you nurses.
Work uniforms. This does not mean lawyers' business suits. Those are not deductible.
I
So
still don't understand that
if
one.
you're required to wear certain clothes for the job, then they're going to be considered work uniforms. The example I always think of is the mechanic, and his name tag says.
Can I make this tax deductible?
Yeah, she's pointing at her polo shirt with her little Tampa home
Tampa
top. I'm going to go with no, but you could try it.
I
See
make
how it
my
works out.
people wear it. What are you talking
I
about?
might be able to represent you.
All right, business use of your home is our next one, and we'll be back to talk about that in about 5 seconds. Back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell, and today's show has been very exciting, even if you don't have an IRS problem and need Darrin's help, because we're talking about 50 tax write-offs that you probably don't know about.
Absolutely. Some of them you clearly
Some of
do.
them you
know
might.
about. But when you try to come up with a list of 50, sometimes some of these are a little bit of a stretch.
Yeah, but there's some people that can take them, so.
That's for sure. So business use of your home. So, you can deduct certain expenses for using a part of your home for business. To qualify for this deduction, you must use part of your home for, it has to be the primary location. It has to be a location you use for a meeting with patients or clients. You could use it as a storage facility. Here's what I'm going to say about this one. Okay.
But
You're going to have to look it up. Okay. But don't forget that the business use of your home could be a deduction.
I thought this was a big trigger for an audit. This one is.
It can be for sure. There's also some new rules relating to this. There's like a safe harbor for the home office, that kind of thing.
See, myself legit could have taken that for many years, but didn't because I didn't want it to trigger an audit. Who needs that mess, All right, next one, business use of your car.
I think this one's pretty obvious.
That
I
one
think that people
all for
are
me.
used to writing off mileage for the business use of their car. Here's what I'm going to say about this. You better have good records. This is an issue that comes up in virtually every audit that I work on. Is they're like, okay, so prove up the mileage. Here's another little tip.
Well, I have 5 cars, and one of them is all real estate related.
So that's good. That's a good practice. Here's another little tip on your tax return. If you drove exactly 20,000 miles for some reason for the year, my advice would be claim 19,988.
Really?
I don't
Okay.
want to see a big round number on there. A big round number, it's kind of obvious.
Oh, yeah, no. My numbers are never big and round. They're always weird and off because that's what they are.
It's kind of obvious that you actually, that you estimated. And you probably estimated high. That's what most people do. So there is one little more thing I'm going to say about business use of your car. There is an app there's a bunch of apps actually that track your mileage now, but the best one that I've seen is called Mile IQ. And it basically tracks every single trip you take in your car. And that's going to audit-proof that situation.
Even self-employed for business is pretty good. It keeps track of all those expenses and turns it on automatically, so it's pretty cool. All right, business travel expenses.
Again, I think this is kind of obvious, right? If you have to go to a seminar or convention or travel, way outside of I think it's 50 miles outside of your area, you can write off the business travel expenses. So airfare and a car and certain meals and things like that. Now, there is a caveat. These expenses should not be considered extravagant. Now, this is what's sort of interesting. What's extravagant even mean?
I don't
To
know.
who?
Can you go to a club in Vegas and have like 25 bottles of vodka?
Well, I don't think liquor is ever deductible as a travel expense. So
Really?
no, I don't think so. It could be as a It could be meals and
Entertainment?
entertainment, but I actually think there's a limitation on that as
Then
well.
you're subject to 50%?
No, I don't think alcohol is actually even.
I don't know.
Yeah.
If you're in our business, that might be debatable because you needed to move forward. All right, education expenses is next.
So under the American Opportunity Tax Credit, which has been extended through 2017, you can deduct up to $2,500 per student for 4 years of post-secondary education. That's another good one. I'm going to remember that one in a few years when I have 2 kids in college. Is we're going to be trying to take advantage of all these different educational tax credits.
And employee business expenses.
Now this one's a trap, okay? So
What?
Typically, employers pay for their employees' expenses that are related to business. I'll give you an example. Let's say you were a lawyer and you had to go to the courthouse every day, or often enough that you had to pay for parking down there, okay? So who pays for the parking? If the employer pays for the parking, then the employee doesn't get to deduct it.
Correct,
right?
yeah.
But if the employee pays for the parking, then the employee can deduct it as an employee business expense.
I actually had, I can tell a story really quick. I had an agent that worked for me and we paid all of her dues, expenses, MLS fees, EQ fees, and she was actually mad that she couldn't write it off. And I'm like, well, if you want to write it off, you can pay for it, but I'm paying for it, so I'm writing it off.
Yeah, she didn't quite get that, did she?
Yeah.
So what happens is people double dip on this one. They the employer pays for the expense, and then the employee claims it too, and that's no bueno. It's going to lead to an
I'm
audit.
curious how they know, but we don't have time to talk about that. So earned income tax credit is the next one on the list.
Yeah, it's a commonly overlooked tax credit for low to moderate income individuals. It's not really a deduction, but it's a refundable tax credit, which means that you can actually get more money back from the government than you paid in. Just remember, EIC.
And we're in the home stretch, so educator expenses is on the list.
Teachers can deduct up to $250 of unreimbursed expenses.
Lord
for books and
knows,
supplies and
they've
stuff like
probably
that.
spent more than that. Student loan interest deduction.
Don't forget, you can deduct the student loan deduction up to $2,500.
And your cash donations are too.
Cash donations.
And what about non-cash? That's deductible too, of course.
Yeah, cash donations and non-cash donations. Remember, you better have proof for both of those.
Proof,
You better have
pictures,
proof.
documentation.
You can't just make this stuff up anymore.
Senior tax deduction.
If you or your spouse were 65 or older, you get an extra higher standard deduction amount.
And the last one on our list of 50 tax write-offs you probably don't know about are the standard tax deduction.
This one you probably do know about. If you don't itemize, you're entitled to something called the standard tax deduction. Every person gets one.
Go amend your taxes if you didn't know that one.
Right, yeah. If you don't know that one and you're doing your own taxes, we got a problem, Houston.
Amend it and hire somebody. All right.
All right, so that sound indicates that
Man,
we're
we got
in the
through
home stretch.
50.
We got through 50 just barely, and now we're on the IRS train wreck of the week. Today's story is about an elderly gentleman. Again, he is now retired. He's living on a fixed income, and he ended up with a tax bill of $48,370. And he came into the office and he was like, "Darrin, the IRS wants about $750 a month. I'm living on about $1,700
He
a
was
month."
elderly, like Social Security
Yeah,
elderly?
about 65.
Okay.
I mean, elderly. I don't think 65 is elderly.
But he was not,
but
like,
he
working
was,
age,
Right.
right?
He was receiving Social Security, and so he's living on about $1,700 a month. We filed something called an offer in compromise, which is where you can make a deal to settle for less. He ended up having some equity in assets. He actually had a couple cars and a motorcycle, as I recall. And so what happened is he basically had to pay back the value of the equity in those assets. So it's $7,700 and change to the IRS to settle that $48,000 tax debt. Again, it's one of those, like, we talk about the absolute home runs on the show a lot, where you owe $250,000 and you settle for $250. That's not one of these cases, but is $7,700 better than $48,000? Yes,
Absolutely.
absolutely, every time. And most
Did he
importantly,
have to pay it right away, or did he get to make installments?
he's going to actually, it's kind of an interesting case. It got put through as a cash offer, which means he has 5 months to pay it. He let me know after it was accepted that he would rather have 24 months to pay it, so we're right in the middle of trying to make that a 24
Man,
month.
we gotta figure that, see if we, so what happens? They still keep it?
Well, I don't think it's going to be a problem. I think we're just going to have to talk to the right people and get them to change the terms. It's not going to change the amount at all. It's just going to change the terms. I don't think it's going to be a problem at all.
Well, today's show was super fun. It was all about 50 tax write-offs you don't know about. We'll have to do another show another day on some of the tax write-offs you shouldn't take that often get people in trouble, which is how they land in Darrin's office.
Yes, you can have it. And you can also visit the website at getirshelp.com. Don't forget the podcast and the app, which is the IRS Solution Attorney.
And you can get Darrin by phone at 888-GET-MISH.
888-438-6474.
Darrin, Mish is your host. I'm your co-host, Katrina Mabel. We're glad you're here. Thank you for watching on Facebook and listening. We'll be back same time, same place next week.
For this week, we're out.